Good afternoon. This is Ken Jolliffe with BIS Commodities here in Cedar Rapids with your weekly roundup for the week of May 17th, a week that has caused some exciting times within the grain trade. We started the week out with looking at the window of opportunity to get this 2013 corn crop planted. Beginning part of the week, the discussion was we'd probably get a window of maybe 2, 3, possibly 4 days to work on this corn crop. We began the week with about 28% of the U.S. crop planted. Fortunately, we've been able to have Mother Nature help us out to where our window now has spread into much of the whole 5 to 7 day period, and it's quite possible, and a lot of discussion within the trade, that we could have 60 to 65% of the crop planted here, by the time we see the report next Monday. Looking at it here across Iowa, we've probably seen what I would consider a record pace of putting the crop in the ground. Much of the areas could be, wrapping up or at least pushing, maybe the 80% area, by Saturday night. And we do have accounts that have been fortunate enough to be switching over and start putting some soybeans in the ground here, last night and today. So progress is going quite well. Now, when looking at the corn market, it's kind of a tale of two different storylines there. You look at the July contract this week, it's up about 16.5 cents over a week ago. The December contract's down about 10 cents from a week ago. You continue to see the strong, nearby cash basis, as we see bids posted as much as 80 over the July futures for quick shipment delivery here, this weekend into the Cedar Rapids processing plants. And it's caused the bull spreads to see a considerable amount of action, especially here today, to where the July D spread went from closed yesterday 116.5 out too much as 133.5 here, this afternoon. I guess telling us there, one, that naturally the U.S. producer is busy in the fields, has right now no inclination of wanting to make any new early crop sales. And of course the new crop, I think, is anticipating what I just discussed there, that the planting pace could be at a record level coming into the first part of next week. Looking at the December futures, we did go down and touch the most recent low of 517.5 before being pulled up a little bit, because of the higher July futures here today. Soybean market, kind of the same story there when you look at the old crop and new crop comparison. July beans for the week up 49.5 cents. November beans for the week up 22.75 cents. Here again, the nearby tightness of the old crop beans, the record level of basis being paid right now. Crush margins are exceptionally good for the processor here in the United States yet to produce beans. We did see some additional meal sales made off the export report yesterday, and this just kind of tightens up this whole picture when we continue to see some sales of our old crop beans or old crop products out of the country. So it appears the job of this market is naturally to work itself higher until we get up to a level to where the Latin American crop or the Latin American products work back maybe towards this part of the northern hemisphere. The other thing that I think is kind of tied into some of this as we move forward, as we see the livestock markets continue to work downward. We're seeing the metals market working down as gold's going back down towards $1,300. We're seeing the U.S. dollar making a huge rally here again this week, and it's closing out here this afternoon at 3-year highs. As we look back to 2010, and part of the reason for the higher dollar, with the U.S. economy, the world economies like they are, this is continuing to put a burden on top of our export markets as far as price comparison. You look at the FOB markets around the world, and in the old crop comparison, we're still $30 to $40 a ton a higher price than Brazilian and Argentine corn, and $10 to $20 a ton higher price than the Argentine and Brazilian beans at this particular time. So I think the dollar is affecting, our grains and probably affecting the exports as far as our livestock. So another thing this afternoon, Informa did come out, with their crop estimate this morning, and there's been a lot of chatter here, because of the lateness of the planting of the 2013 crop, that we were going to see a reduction in corn acres. And actually, they came out with a number of about 96.8 million acres of corn, which is about 900,000 acres down from their previous estimate, and just really down slightly from the USDA numbers that we saw, earlier this month. Soybeans, they came out with 78.3 million acres. That's down about 200,000 acres, from their previous estimate, and it's only down just actually it's up about 500,000 acres from the government's estimates. So really not much change in that, and it appears with the pace that we're putting this crop in here right now that we maybe won't see much slippage, as far as the corn and the bean ratio at this particular time. Still a little bit of chatter, that if we are going to lose some acres, it could be, up into the North Dakota area, parts of Minnesota. But we'll kind of see how that comes all out next week when we take a look at the planting progress at that particular time. So, kind of summary for the week here, in the grains is the storyline of old crop versus new crop in both corn and beans. I think that tightness and that relationship will probably continue as we move into to next week, and then we'll take a look at where we stand with planting pace, and see how far along we are, see what Mother Nature's doing for us as we get into the mid part of next week. So, have a good weekend.